In a short period of time, let's put it that way, you've seen early stage, you've seen super high growth, you've seen profitable, like tech but non-VC backed business, and now you're going to publicly traded, already matured. So you have seen the entire spectrum possible.
When you say it like that, it sounds like I did it on purpose.
Hello everyone, and welcome back for another episode of HR Tech Trailblazers. My name is Nico Simko. I'm one of the co-founders and the CEO of Clair. Today, I'm super excited to have Samir Desai with us. Samir, for those of you who know him, is a little bit of a legend in the fintech space. He has been working at Chime in the early days, and now he's at Block, building partnerships in the financial infrastructure that Block uses across their product range. I'm really excited for this conversation because Samir has immense knowledge both on the consumer fintech space, but now with his new role at Block, he brings the HR tech and SaaS vertical to that structure as well. So with that, Samir, welcome to the podcast.
Awesome, it's good to be here.
I gave a very brief introduction on you, but I'd love for you to take maybe a minute and introduce yourself, why you're in the fintech space, what has been your career so far, and what's your current role at Block?
Yeah, so it's interesting you talk about how did I get into the fintech space? And when I think about my career, it's interestingly, I sort of have been in fintech since the very beginning. When I graduated from college, like a lot of folks from Duke, a lot of us went into investment banking. But unlike the rest of the investment bankers who were sort of focusing on these different industries, I was focusing on what is called market infrastructure. And for whatever reason, that wasn't the popular group. Everybody wanted to work on the banks or the insurance companies or the specialty finance companies, but I just wanted to work on exchanges and market data companies and early fintechs. So I was in investment banking for about a year and a half, and I got this sort of random opportunity to go out west to join a startup. And I'd been wanting to sort of get into the startup space. It was something that I was always excited about. So I made the jump, and I joined this company really as their first dedicated finance hire. It's a company called Sift. They were really the first folks to bring machine learning to fight fraud. So the original AI fighting fraud company. And that's where I got kind of cut my teeth sort of building operational finance. And I really loved it. And so when I got this random look at this little, neo bank that, was sort of up and coming, I'd never heard about it before, but it reminded me of my first neobank, which was I was an early user of the bank Simple. And even when I was at JP Morgan, I was using my Simple
What
bank.
year was that?
That was, so I graduated in 2013. When I joined Sift, it was 2015. And then when I saw this opportunity, it was kind of the tail end of 2017.
So this was early Chime years.
Early Chime. So this company that I talked to, when I'm talking to who I thought was the recruiter, who was actually the CFO, was Chime. And so I joined Chime as the, I think, 31st employee.
Wow.
And my mandate at the time was to build up the strategic finance team. And that meant really everything. It was FP&A, it was building up the accounting org, it was hiring out our strategic finance leads. And then sort of 6 months into my role as I'm building this out, Matt Newcomb, the CFO, kind of came to me and was like, hey, look, we're doing really well and we're gonna raise a round. And I was like, wait, when I joined, we had just raised our Series B. What do you mean 6 months later we're raising a round? And so we went through the process, we did the fundraise and we raised our Series C. And then I was like, okay, great. I'm gonna go back to what you guys hired me for, which is to build out this org, to hire the right people, to design planning, budgeting, and build out strategic finance. And then 6 months later, Matt came to me and he's like, hey, we're doing really well. We're gonna raise our Series D. And so then over the course of basically the 4 years that I was at Chime, we actually raised 5 equity rounds, raised over $1 billion in capital. And along the way, we built up this strategic finance org. And when I say strategic finance, what I mean, what I'm talking about is we're really looking at how to deploy the marginal dollar to best serve the business.
Right.
So that could be let's invest this in product. And so we built a framework for how our product team could make product decisions that are unit economically favorable. It could be, let's invest in a financial partnership. We were negotiating and structuring the deal with Visa or with our transaction processor or with our banks. Yeah. And we could also be using it to sort of explore other strategic initiatives. So whether it's M&A or debt fundraising or equity fundraising, we're sort of involved there. And it was really awesome to sort of build up a team of specialists that like focused on that. After almost 4 years at Chime, again, I joined at Series B. We were about 30 people. After 4 years, we were a 1,200 person company. We had just closed our Series G. And I decided I wanted to try something new. And I wanted to go back to the early stage. But I had the best experience you could possibly have in consumer fintech at Chime.
Yeah.
So I kind of shifted gears and I focused on this company called Unit, which is on the fintech infrastructure side. So rather than building the next Chime, it's building the tools so a founder can build the next Chime.
And what stage was Unit at when you decided to make that jump?
Yeah, interestingly, Unit had just raised its Series C.
Okay.
When I joined Sift, it was just after they had raised a $17 million Series B. When I joined Chime, I was working for this guy named Matt, who at a company that had just raised a $17 million Series B. When I joined Unit, I was working for a guy named Matt. So I kept the commonality going, I guess.
So if anybody wants to hire Samir, they need to first hire a Matt.
That's right.
Have about a $17 million Series B, and then you have a shot.
That's right. That's right. And so it was interesting at Unit. The opportunity was sort of one where I think what I was excited about was that I could take the experience from Chime and sort of convince them basically that even though they had just hired a VP of finance, they should hire me to be their head of strategic finance. Okay. And strategic finance would be different. We would focus on those 3 areas: product, finance, negotiations, and strategic initiatives. This was kind of an incredible experience. But I think for me, what I sort of didn't realize, or what maybe I had forgotten, is that being at an early stage startup is hard.
Yes.
It's really hard. And the things that I had grown comfortable with at Chime as we had sort of expanded, like having a consolidated data infrastructure or having a team to build, to sort of build around and grow with, I didn't have at Unit. And as much as I loved my Unit experience, I was sort of ready to I guess graduate to the more structured finance team of a bigger company. And so I joined a company called Hudson River Trading. Mm-hmm. They're an algorithmic trading firm, so still in the fintech space. But what was different about them was really everything other than the fact that they had the fintech infrastructure, right? So number one, instead of being venture backed, they had never raised outside capital. Number two, instead of having never been profitable, they were profitable since day one. And number three is their stakeholders were totally different. They didn't have products, they didn't have customers, they didn't have investors. And so I was thinking, this is amazing. I get this opportunity to just drive finance with a bunch of finance-minded engineers and finance folks. And I think it was a unique experience in that way. It was very much a tech company, but a tech company run entirely by engineers. No sales, no marketing, it's just engineers and then finance people focusing on trading algorithmically.
Right.
And HRT is about 1,000 people, but they trade about 10% or more of the US equities market every day.
Wow.
And so the only way you can do that is with super smart engineers building algorithms to trade. And it was really amazing working with those people. Yeah, but then again, I was feeling, I guess I was feeling the pull of a consumer fintech where you're building for customers. You have this North Star, which is how do I make the financial experience of my users just more meaningful and enable that access.
Exactly.
That's when this unique role at Block came up. And so the role that I was able to get at Block and the role that I have now is I am in charge of the financial strategy and kind of deal economics for all of the financial partnerships at Block. So that covers our Cash App and Block brands. It covers our US markets and our international markets. And it covers the several verticals that sort of encompass our business.
I love that. Well, in a short period of time, let's put it that way, you've seen early stage, you've seen super high growth, you've seen profitable like tech but non-VC backed business, and now you're going to publicly traded, already matured. So you have seen the entire spectrum possible.
When you say it like that, it sounds like I did it on purpose, but it didn't happen quite that way. But it's great. Yeah, it sounds good.
It's like, what other frontier can you get to? I think you're one of the people that's like, you have kind of seen it all at this point. But anyways, going back to Block, you know that this podcast is a lot about what fintech is doing in relation to HR tech. So maybe one of the big questions is, you took this role at Block. Block is a consortium of products, and maybe you can talk a little bit about that. What gets you excited at the frontier of fintech and HR tech?
What I really love about Block, what got me excited about working there, and what I think makes it really unique is it's, like you said, it's an ecosystem in a way, in that we have the Square business that has our Square sellers, our small SMBs, small businesses that are serving many different users through a variety of like products and services. We have our Cash App product, which is essentially a bank account on your phone. And then we have a couple of emerging brands, our Tidal sort of music app, similar to Spotify, Proto, our Bitcoin mining business, and then Spiral, which is sort of in the crypto space. And then, of course, Afterpay, which enables BNPL for our users. And what I get excited about is the opportunities and the products and features that connect the ecosystem. And I really think, when I think about HR tech, I think about something like earned wage access as being that connective layer, right? Where you have Square sellers who may have employees that are also Cash App users, and we can enable kind of on-demand access to their paycheck via earned wage access and connect these two ecosystems. And now if you're a Cash App user, you really want to have a Square seller, because a Square seller will enable EWA. If you're a Square seller and you have Cash App users that are employees, then you get this like nice virtuous cycle, right? So that connective tissue is I think really important.
And so let's talk a little bit about, that's the strategic concept, and I think at Clair we fully agree with that. What's hard about the execution of that vision? Or is it easy?
No, I think it's really hard because I think, especially if we talk about EWA in specific, or earned wage access, it's a very complex equation, right? You have to get payroll providers to sort of like enable this integration. You have to get users to buy into what you're building. The economics have to make sense. You also then have to actually make the fintech product work, which means you have to actually have a really good underwriting system. You have to have effective sort of like financial integrations. You have to make sure the disbursements work as planned. And that's historically been really hard to build internally, and also has been very complex. Like, you really have to understand a bunch of different systems. And then you have a bit of a cold start problem, which is like, how do I get the employers for the user base, right?
Right. So let's talk maybe a little bit about that. There's kind of two, since you have one of these interesting positions where on one side you have, Cash App, that's a consumer brand and would like to digest as much of payroll data as possible. And then you have, point of sale also extends to a payroll system that has kind of the employee there every single day. Anytime you go for lunch and you need to pay something, the employee uses the tool in order to, get somebody to pay for things. They're in there all the time.
Yeah.
Maybe the question I'm trying to get to is, how'd you get those two to match? Is it the payroll system that's going to go and build a solution that the employee can access at work and on a work app, or is it Cash App that's going to build something, but then they need to find a way to get data across that is not necessarily employee data, some of it is employer data. So where do you see this kind of, maybe it's both. Yeah. Where do you see this going?
I mean, it's an interesting question. Like, on the one hand, I think there's a real desire by the Cash Apps, the Cash Apps of the world, really, to sort of build this product and feature, this experience that is like very much Cash App. We've built this brand equity around the delivery of our features that like people are really, that resonate with people. But at the same time, like, we just don't know payroll, like a payroll data provider, a payroll company. When we're thinking about underwriting, we're thinking about kind of access, we're thinking about like familiarity, we're thinking about trust. That's where the payroll company like really comes in. And so I think where we probably, different folks have tried different ways to do this. Oh, and then there's certainly also like there's a difference in kind of risk profile. So if the Cash App, I'm trying to sort of underwrite these users, I'm gonna have to do that maybe using kind of their cash flow or like understanding their transaction data, but I can only sort of estimate what their earnings are in order to kind of deliver an estimate of what their wage could be. Whereas if I work with a payroll provider, if I'm directly connected to that payroll provider, or if I use financial infrastructure to get directly connected, then I know what the earnings are.
Yeah.
And then I can maybe underwrite in a way that's free or low cost. I can give them more money. I can give it to them faster.
Why do you get so excited about EWA? My original question was like pretty broad. It was like, you have HR Tech, you have Fintech, and you're like, hey, EWA is a thing. Of course, at Clair, we're convinced that this is an important product, but why do you think it's so important?
For me, I think it starts with like, what is the most important to our users? Like, how do we best serve our users? And when we talk to our users about what's the most resonant to them, it is all around liquidity.
Yeah.
It is around getting access to your money faster. It is around being able to access the money that you've already earned to sort of live the life that you need. Because when we're talking about like mainstream Americans, they're living paycheck to paycheck, and it's like tough. It's tough out there. And so if there's any way that we can sort of like enable or accelerate that access, I think that's really important. Like, we've done that historically at Cash App through our free overdraft product. We've done that through our borrow product, which allows you to, for sort of extending out maybe 4 weeks or more. And then we have Afterpay as a BNPL on a transaction by transaction basis. But where I think there's opportunity is sort of in the sort of between paycheck stage. It's more than the transaction level, but it's not so far out as like a 4 weeks out where you're providing liquidity. So I start with the user, and then I think about the business. And I think for Block, there's just this amazing way of connecting our family of brands together. So I get our Square sellers and Square payroll, and I can connect that to Cash App, or I just have a way to like sort of build that ecosystem.
So one of the main data points in terms of consumer need is that we live in a world where about 40% of the population, plus or minus, would like access to their pay faster. That's one statement. And then the other statement is that the data is sitting in the cloud in some software, confirming that Joey has already worked his hours, he's gonna get paid, and that data is available. And so you have kind of this almost tech opportunity to match the demand with the supply. What do you think gets us there fastest? Because that's such a huge opportunity.
Yeah, and I think it's the one that we think about a bunch with Block, and like not just how do we get to that opportunity? How do we do it really fast? And certainly we've explored. Maybe we do this on our own. We go to our big top payroll providers. We build these integrations. We try to see how we can access the data, but it's been hard because it's unique for each of these payroll providers. There's all this different data. The APIs are different, and we're not really. This is like a part of what we want to do, but there's so many different things that we want to do. So it becomes a prioritization question. It's also a technological problem. It's something that we struggle with, but we know our users want it, right? You said 40% of users. I might say that's even higher, especially for our user base. So I don't know. I mean, maybe the question goes back to you. Like, isn't this what Clair is trying to solve, or like how do you think about this? Like, are you the connectivity layer? Is there something else? Yeah. Yeah.
No, I appreciate the question. I think there's been, before even talking about Clair, there's been different companies who've tried to tackle that issue. I think you're right that especially in I would say more paycheck to paycheck population, the 40% I was quoting can even be sometimes double that. It can be close to 80% of people wanting it. So the demand there is clear. I would say there's two theses that we've seen. The number one thesis is I am a data, layer similar to what Plaid did with banking data. And I will go and either through scraping or through direct partnerships try to pull data from payroll companies. The other option is, you actually treat the payroll companies as vertical SaaS software companies that are loved by employers and employees, and you enable them to build their own solutions. Because both of them are solving for the thing you were talking about, which is you need precise time and attendance payroll data confirmation of pay data in order to give the best product possible. I think everybody agrees on this.
Yeah.
If not, you're going into kind of, paycheck underwriting or like cash flow underwriting, and that becomes a little bit more risk prone, and so the economics are a little tougher, the underwriting is a little tougher. So going back to my story, It's like you kind of need that data. What I think we've seen is that payroll companies, which again are the key to this problem, tend to be afraid of just openly distributing what they see as less employee data, but more employer data. To give a simple example, think of a large publicly traded retailer. Do they really want to just have an open API where kind of a software provider can just pull data on employment, on people clocking in and out? Just imagine, you're trading equities. If you know a little bit how many workers are working at each spot at the aggregate level, that's suddenly like proprietary data that you have access to. And so I think that's one example. There's also InfoSec concerns. And so kind of being a data layer redistributor is a harder case in the HR tech space than it has been for, I think, what Plaid has done with banking data. Why? Because banking data is the consumer's data. It's not a third party. It's not their employer data. It's the employee's data, as in the consumer, and no one else. Mm-hmm. And so it's easier for them to have access, and they have unfettered access to it. And so what we've kind of made the bet on, which is panning out very well for us, but we're always open to other opinions. That's why we do these podcasts. Right. Over time, it's become easier, and it's continuing to be easier for payroll companies and workforce management systems to build their own value-added services. And it's not a nice to have, it's a need to have for them to build those. Why? Because their valuation needs to go up, because they need to beat competitors in their sales processes. They need to cater to a population that is now accustomed to better user experiences. And so overall, I think the bet at Clair is that payroll and workforce management companies are going to become better and better at building amazing employee and employer experiences. They're building services on top of their core platform. And so we want to enable them to build consumer financial services, which at scale, we can also, end up creating partnerships where we can, offer this to a cash app that can then connect to this entire piece of connectivity. I think we're a little bit a ways from that. But the idea is, if we're able to do that, then we can do what, Clair's mission is, which is make America's workforce feel financially free by connecting all of banking services to the place of employment.
Yeah, I think that very much resonates. And when I think about something that you've mentioned here, when we think about our Square brand, it has both the business owner and where it's building really this operating system for a business owner, but it's also serving the employees, right? And we have a Square payroll product, and we have, their holding point of sale systems. And what you really want, or what you can hope for, is that you can build excitement and love for the product, not just with the business owner, but also with the employees. And one way to do that is actually with what you're talking about, which is that you build value-added services on top that actually serve the employee, right? When you're then a payroll provider, you have this access to data. You can go from being, that sort of poorly rated app, but that I have to use to get my paycheck, to I love this service, this app, or the Square payroll product because it's giving me early access to my money, right? So if I can build that, then I can build brand equity around that. I get the flywheel of my employees love my product, my app, so they're bringing it to their new employers. I have my employers who love what we build because we increase retention, and it gets again to that virtuous cycle.
Amazing. Well, let's maybe switch gears now and talk a little bit about some of the things that get you excited over the next 5 years in the industry. I know one thing we can talk about is AI, of course, because that's the topic of the hour. There's also stable coins, but you might also see things that are not, I would say, as, fancy press, top of the newspaper topic. Yeah, what gets you excited for the next 5 years?
Yeah, maybe the first place, and I'm actually curious how you think about this, but when I think about AI, the use of AI in products, I think I'm particularly excited to see that much more embedded in apps, but to do it in like a really useful way. One of Block's values is like giving time back. We want to make whatever we do as efficient as possible,
right,
so that we can give our small businesses or we can give our users just like more of their time back, right, to focus on the things that matter. And so on the Square side, we've like introduced AI that almost acts like a COO almost. Yeah. They will help you analyze your order reports and look at average order value and who's buying when at what time. And then on the Cash App side, like what we're starting to do with AI is maybe sort of almost introduce it as like a CFO. So right, here's how you spent your money. You can minimize costs here. Here's where you're getting more value. Just truly useful to the user and not just like a buzzword. But I'm curious, like, how is Clair thinking about like AI?
For me, my personal view on how AI adoption is going is you kind of have three horizons. Like the first horizon is AI is a massive change in terms of technology infrastructure. And so a lot of what and I think most people are at that stage in general is just tinkering. It's just like you have new tools, some work, some don't. So it's kind of in the trial mode. I think that's where the vast majority of people are. Then there's like the second horizon, which is, AI is a similar kind of seismic change than the internet, right? Like it's kind of going to become a thing that is incorporated into the operational layer of most companies, whether it's better customer support, better ability to like write code, better ability to like, create marketing content, even better way to make decisions within a company. And so I think there's a lot of advanced companies that have already successfully done that. I think companies, need a little less headcount. I'm not in the camp of like you can bring headcount to zero. I think that's very difficult. You still need a human to command an AI system. But I think that's where a lot of companies are. And then there's the third horizon, which is, actually that becomes the component and a core component of the end product you launch. And so some of the examples you were giving is a lot of humans now need to make decisions in a product that they shouldn't actually have to make, right? So for example, if you're buying a piece of software, AI can probably help you figure out if that piece of software is well priced or not, and help you also with that negotiation. So it's now that becomes a kind of an endpoint if that's the product you're launching. I think one of the main things that I see, especially in consumer financial services or just in regular consumer tech, is that the hardware right now needs to be adapted for the age of AI. And I think until that happens, I think the level of adoption and of really seismic change in terms of the way we kind of humans interact with technology is not going to change as much as we think. I'll give you one good example. If you've taken a wage advance before with Clair in any of our partner apps and you're a returning user, you'll take less than 30 seconds to take an advance. It's gonna be very hard for AI to make this even more efficient, right? Unless the phone disappears and now we have glasses, right? And so I think layer 3 is really going to be the place where we're gonna need hardware change.
Yeah.
And that's why I get excited with Johnny Ive's company got acquired by OpenAI. And I think like the stock market kind of got a little scared about what happens to Apple. Like those sorts of reactions, I think are just the beginning. I think we're gonna see a lot of bets, like big investments to make sure that hardware follows what's going on in the software space.
Yeah, you excited for the AI glasses?
I mean, look, I am on my phone 24/7, so if I can get less technology, that would be a little nice, but I think there will be no way around like, adapting to the next wave. And I think like if we don't adapt, then you're just gonna, fall behind. So I think there's also, all of us will have to find a way, and the hardware will have to find a way to also disconnect.
Yeah.
Also because our brains are made to do a lot of gymnastics. And if it becomes easier and easier to do everything, then we as humans are gonna become less and less smart. What do you think?
Yeah, I mean, I think that's right. It does seem like AI is essentially getting embedded everywhere, and we're seeing it like it's very much a part of all the ways that we're operating. And like it's like every day there's like a new application of AI, right? Like a new way that we can use it, whether it's summarizing emails or now it's writing my emails. It's helping me do research. It's helping me do price comparisons. But yeah, you're right. On the HR tech side, I think the questions around like how is AI going to make this like truly better versus like just the buzzwords around it, I think like those questions like still need to be answered. You've talked about payroll providers as this like incredible fountain of data, and so maybe you're using this to more intelligently withhold taxes or other garnishments, or maybe you're thinking about ways that like you can make the paycheck form like more clear, or maybe you're using AI to like better enable like the instant direct deposit switching or something like that.
Yeah.
But it does feel like until there's like a massive change in like our regular consumer tech interface, maybe that's a little harder. But I'm actually of the mind of like I've liked the concept of like the AI personal assistant that actually knows everything about me. There's this book, The Golden Compass, that talks about like your daemon, right? So this is it's almost like an external representation of your soul, and it's something that you can interact with that knows you really well because it is you.
Right.
And I think we're getting to a place, probably maybe not now, but over the next 5-10 years, where our daemon can be represented by this AI that can then better understand what I need, and maybe it's it's helping me not think about the kind of easy day-to-day things that are like very routine. It's just handling those things. So it's my grocery list, it's my paycheck, it's those kinds of things. And maybe it's also helping me with the super complicated hard things like getting a mortgage. So the easy and the hard goes away, and I can just like focus on the stuff that I like doing.
Yes.
Yeah.
One question I had for you, why'd you write your newsletter? You're so busy, you do so many things, but still one of your newsletters is like the thing that gets the most shared on LinkedIn. Like why'd you spend some time on the newsletter?
First, it really started, it was coming out of Chime. I had spent 4 years there. It had been this like amazing experience, but also a draining one. And so I had this time to sort of unpack, recharge, and recalibrate. And I was realizing sort of now being on the outside how so much of like the core financial concepts that like underlie how we understand fintech that are like really well known by insiders are actually not well represented externally. So something like, how does the Durbin Amendment work? Or like, what is interchange? Or how do I think about instant money movement? These are like core concepts that you understand once you're inside the industry, but outside it's hard to make sense of. And so like I started with, really just like tweets and threads on Twitter. And then that evolved into a newsletter that is really just about like distilling complex concepts into kind of easy to understand ideas, right? So that was like, the newsletter's interspace. It's supposed to represent like the space between two objects, right? Yes. That's where fintech operates, in the middle, right? It's the intermediary, it's the connection point, it's the connection layer. So it's been a lot of fun.
I love it. Well, thank you so much for being here, Samir.
Cool, thank you.
Of course.